वेलकम बैक फ्रेंड्स। सो आज है सैटरडे एंड सैटरडे से याद आया कि सैटरडे को तो वीकेंड होता है एंड स्पेशली फॉर पीपल लाइक अस हु आर सैलरीड एंड वर्किंग एंड एम्प्लॉयड वी फाइंड इट वेरी एक्साइटिंग कि वी ऑलवेज लुक फॉरवर्ड टू वीकेंड। बट जस्ट इमेजिन कि कुछ ऐसा हो जाए कि वीकेंड जो है वो 3 दिन का, 4 दिन का या 5 दिन का एंड वाई नॉट फॉर 7 days हो जाए। बेसिकली व्हाट वी आर सेइंग इज कि इज इट नॉट पॉसिबल समहाउ दैट वी कैन retire early. So in today's video, we are going to talk about very specific 3 steps which we can take, which will help us retire early. But before that, if you are here for the first time and you've not subscribed the channel yet, so please यार इसको subscribe कर लो, क्योंकि उससे हमें पता चलता है कि you are enjoying our video and it encourages us to make more videos. Thank you. So जब retirement planning की बात करते हैं तो एक अच्छी बात उसमें ये है कि जितने भी लोगों से मैंने बात की है एंड माई जनरल परसेप्शन अबाउट द पीपल इज पीपल आर रियली इंटरेस्टेड टू डू समथिंग अबाउट रिटायरमेंट प्लानिंग. दे वॉन्ट टू डू समथिंग, दे वॉन्ट टू इन्वेस्ट. बट द पार्ट ऑफ द इशू दैट आई हैव नोटेड इज कि मोस्ट ऑफ द केसेस में द अप्रोच इज वेरी एडहॉक. व्हाट डज इट मीन इज कि किसी फ्रेंड ने बोल दिया कि यार ये इंश्योरेंस पॉलिसी बहुत अच्छा है, इसमें इन्वेस्ट कर दे, तो दे जस्ट गो आफ्टर इन्वेस्टिंग इनटू दैट इंश्योरेंस पॉलिसी or invest into this rental property, so the rentals that will come from it would give you a cash flow at the time of retirement. So the ad hocism in the planning, I think, is the biggest challenge. So in this video हम लोग simple 3 steps के बारे में बात करेंगे जो कि सर्व करेंगे as a basic 101 on the retirement planning. So इसे देखिए आप end तक and I'm sure कि by the end of this video you will get a fairly good idea, a systematic way to look at retirement for your healthy golden years. So step number 1, मुझे ऐसा लगता है कि we must start with saying where do we stand today, doing a reality check of saying that how does my portfolio look like today is a good starting point. Normally when we start investing for retirement in our 20s or 30s, we make a lot of assumptions and we say ki yaar this is the percentage of growth I'm going to get from equities, this is the percentage of growth I'm going from fixed deposits, this is the inflation rate, this is the interest on the capital employed I'm going to get, these are the kind of companies I want to invest, so and so forth. Rarely in the real life the Excel file that we have created gets replicated. So the reality generally is surprising. So it is always a good idea to begin with saying that where do I stand today, both in terms of the asset investments that I have made and the underlying assumptions that I have made. The most critical is the assumption that we have made around your ability to take risk, not just now but couple of years down the line when you want to retire, is also an equally important item. The other thing to do is to look at various accumulated balances that you have in your EPF, in your PPF or NPS, or the market values of equities, mutual fund holdings, small saving schemes, or जो भी हो, for example other assets like for example gold, your house property. Are there specific goals that are still pending? What are the kind of mortgages you are left with? What is the interest rate, etc. So all those give you a fairly good idea that what are your true asset values and what are your true liabilities. Once you have that particular view, you may then start to rejig your portfolio to say that there are certain items in my portfolio which I want to carry forward. There are certain portfolio items which does not make sense at this point of time for me to carry forward. So take a stock of that. Once you are aware of your actual position, asset liability position as on date, the next logical step is to estimate what would you need when you reach the retirement time. In this video, the idea is not to walk you through the Excel calculations. There are a number of good tools available, ready-made on the website. A simple Google search will let you know how do you estimate your expenses, how do you estimate your returns, how do you estimate the inflation. But इस वीडियो में को हम conceptual level पे रखेंगे so that we just talk the logical process and not the factual number crunching in this video. So at this stage, there are actually 3 things that we should think about. Number 1, step back and think what does and how does retirement look like to you. Retirement सुनने में एक common term लगती है, but retirement is very different for different people. So therefore it is important to reflect saying that how will my retirement look like? Are you planning to completely retire from active working life, or you're still going to do some active work which may not give you the similar monetary compensation as you are getting today, but may still help you on your cash flows to take care of some part of your expenses. That's number one. Number two is really to say that are we going to have same level of expenses depending on how far is your retirement from today. If the retirement is little far away, we should reflect on saying that what are my expenses today? What are the expenses I'm expecting to carry forward even at the time when I retire? What are the new expenses I'm going to add, and what are the expenses which will be dropped off by that particular point of time? And then apply all your standard models, your Excel files, your all that to come out to a value of your real expenses that you have to spend during that time. Now the time to look at your portfolio again. Once you look at your portfolio, look at two things. One, what is the size of corpus? And second, what is the composition and the allocation of the portfolio? The allocation is also equally important because it has an impact on the returns that you're going to make. Plus, it will also help you remain calm at the time of the volatility in the market. The volatility should be adjusted in such a way that during these years, your golden years, you should not be disturbed by the volatility of your portfolio or feel uncomfortable at some point of time that what I have planned may not materialize because of this undue volatility in my portfolio. So choose the right mix. There are a number of models available in the market that you can use. There are a number of good instruments available in the market to neutralize this volatility to a larger extent. So the final thing I would say is that continue to monitor your portfolio, especially the allocations during the years of your retirement. It is extremely important that we consult the subject matters where we find the volatility has started bothering us, or where we find the circumstances around us has substantially changed. So consult. There are a number of good consultants available around us who are more than happy to help. Finally, I would say is feel proud of yourself. Just take a moment to recognize that how far have you come in this journey and what all you have achieved. We all are proud of you. So take good care of yourself. So आज की वीडियो के लिए सिर्फ इतना ही. बट अगर आपको वीडियो पसंद आई तो हमें ज़रूर बताइए. बताने का एक बहुत आसान तरीका है. Just hit the subscribe button and we'll come to know that how much you liked the video, you enjoyed the video. And do share this video and leave the comments below if you have any questions or would need any further videos on the similar subject. Thank you for now. Bye-bye.